One who has been hit hard in this market crash and have no idea what to do, I've got a strategy for you. This isn't the usual buy defensive and wait it out advice. This is something stronger, smarter, a strategy that can not only limit your losses but also help you build a portfolio of near-term multi-baggers using just a few parameters. I have implemented this in my portfolio and turned the last market correction into my biggest wealth opportunity. Now, ideally, the best move is to exit at the first sign of a crack and never get stuck in a market crash. That's how you avoid the worst damage. But let's face it, we are way past that point in the current bear market. So, if you stayed invested, even after the initial signals, which by the way were clear in January as per my system, then now is the time to take some tough calls. Time for smart maneuvers to get your portfolio back on track. Here is one rule that I religiously follow during market crashes. Don't shove your losses under the rug and forget about them. That's the dumbest strategy, and I say that from experience. Years ago, I bought stocks right at the peak of a bull run, held them through the crash, thinking I just wait it out. The result, my portfolio tanked 80%. Some of those stocks are now trading at pennies. There are two big problems with that approach. First, if you have loaded up on high flying stocks from the previous bull market, chances are those stocks won't be coming back to your price level anytime soon, even if the market recovers. Why? Because the leaders of the last bull market rarely lead the next one. Now, look at real estate stocks. They peaked during the 2007 bull run, came back to lead only in 2024. That's 17 years of hibernation. Same with pharma. Many peaked in 2015 after a strong 5-year run. Took them nearly a decade to climb back to those highs again. Second, the opportunity cost. If your capital is stuck in laggards, you're missing out on the real action. While the max downside in a losing stock is 100%, the upside in new winner can be 100%, 500%, 1000%, or even 5000%. So why stay on a stall train when you can hop on the flying train? That's exactly what I do in my portfolio. I'm totally fine pulling out a massive loser if it means getting onto a promising winner. But to do that, I need a system that helps me identify those winners with decent accuracy. So, how do I find those fast moving trains? The stocks that could lead the next bull market and deliver multi-bagger returns. Let's break it down. Most great stocks, those that lead massive rallies, have one thing in common. This is explosive earnings growth, and most laggards, flat, declining, or stagnant earnings. So the real trick, catch those stocks right when they enter a phase of strong earnings momentum. Here is a simple framework. Stock prices are generally driven by two factors: a valuation multiple, like the PE ratio or price to earnings, and the EPS or earnings per share of the company. Let's simplify this. Imagine a business with 1000 shares and a profit of 10,000 rupees. Its EPS is equal to 10 rupees. Now if investors value this business at 10x PE, the share price is 100 rupees. Now say the business grows and EPS jumps to 100 rupees. Assuming the PE stays at 10x, the price jumps to 1000 rupees. That's a 10 times return. But that's not where it ends. When businesses post such explosive growth, investors often pay a premium. That 10x PE can turn into 20x, 30x, or even 60x. Let me give you a real world example. Here is a company called Shilchar Technologies, a stock I have personally invested in the past. Its EPS shot up from 7 rupees to 120 rupees in just 3 years. That's a 17 times jump. As a result, its PE went from 15 times to 60 times. Let's do the math. Starting stock price 7 rupees EPS into 15 times PE, which is equal to 105 rupees. 3 years later, 120 rupees EPS and 60 PE is equal to 7,200 rupees. That's a 70 times return in 3 years. At its peak, the stock touched 8,900. That's an 85 bagger. And guess what? There are plenty of more like that, and there will be more in the future. So, what's the survival recipe? Dump the laggards and jump onto the leaders. Earnings get rewarded even in bear markets. If you follow a system that tracks earnings, your down periods will be short-lived and much more manageable. Now the big question, how do you spot these stocks? It is easier than it sounds. Most explosive runs begin with one standout quarter, then another and another. For example, Shilchar posted a standout quarterly earnings in February 2022 when the stock price was 180 rupees. In less than 2 years, the stock price was 8,000 rupees, a 44 times jump. The reasons for the standout quarter can vary. A game-changing product launch like Trent with Zudio, massive price hikes like in chemical stocks during COVID-19, and a strong demand driven by policy tailwinds like what happened with Shilchar. You just have to follow the trail. Platforms like screeners.in make it easy. One explosive quarter is all you need to get started. Even if you don't go deep into the why, you can still ride the trend using simple technical parameters. Even when you get one stock like Shilchar's every 2 years and you put 10% of your portfolio in the stock, that will amount to a 340% portfolio return from only one stock. You could have grown your portfolio over 4 times in 2 years even when all other 9 bets go to zero. That's the power of one quick multi-bagger. And I'm saying with experience that you can get more than one such winner every quarter. Coming back to dealing with market crash, once you have a clear process for exiting losers and finding winners, the whole game changes. And believe me, it's a lot easier than you think. It's not wise to spend time regretting what you did not do. Markets give you many such moments and you always come out stronger if you stay the course. The quarterly earnings season is upon us, and if you would like me to make a detailed video on how to use screener.in to spot winning stocks early, drop me a comment below. I'll break it down for you step by step. Thanks for watching and stay sharp.